Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar so far this week has held to a relatively weak phase. After yesterday's down test, recently hit a low of 79.97, respecting its support coming in at 80 cents to 80 cents and 10. The recent rebound in the US dollar has pretty much helped the weakness for the US dollar. With ahead this week, we have the Australian job report, which will be released on Thursday at 11:30. The August job report is expected to see an increase of 17,500, with the unemployment rate expected to hold steadily at 5.6. It is my view that since the spike, or call it a blow off top, or even an exhaustion move, shooting star, and also a bearish pin bar, which has many names to this candle, I expect to see the bearish phase to continue. From a technical point, it is clearly coming through that we are soon about to embark on a bear phase. A break beneath 80 cents would give the next target of 79.5, and I'd look lower towards 78.70 as a potential target. With the indicators also holding this view, little upside case is supportive, with the cap now seen around 80.60. With the US dollar index nudging slightly closer to the 92 handle overnight, the close this morning was at 91.88. Since rebounding off its multi-year lows around 91, it is viewed that the bull market for the US still has a lot of work to do, and at the moment potentially still needs to claim above 92.30.40 to get a sustainable rally that could see a move up towards 93.60.80. Now, for some of us that are not aware, the US dollar measures the greenback strength against a trade-weighted basket of 6 major currencies and is weighed at 57.6 against the euro. So this in terms will bring the attention towards this uptrend coming in at 119.10.15. Now, sustained break beneath there, we did get a low of 119.26 overnight. Would see further risk to the downside and bringing a target of 118.40 with the next uptrend coming in at 117.60.80 and reassess from there. Any advances should fail. The reason behind that is although we did have a shooting star which was negated on Friday, but the next shooting star has confirmation, so I do expect to see further weakness coming into the euro in the next couple of days. This week we do have, though, to keep a very close watch on is the US to release its August CPI, and it is looking for an improvement to 0.3%. Previously was at 0.1. The recent weakness in the inflation has hindered the Fed plans to raise interest rates a third time this year, with the odds now around 35% priced in for the next hike. However, if we get a slightly better inflation number coming out this week, then we could see the next hike back on the cards. Interesting price action for dollar yen over the last few days as the market bulls still maintain their stance. Now, a little bit of caution on where we are at the moment. Trading around the 110 handle is the fact, although the crisis between North Korea against its neighbouring Japan and South Korean parties has eased somewhat, the biggest concern is at the moment against the view of the market could actually drop back towards that 109.45.60. And the reason behind that is if the tension starts mounting again with the US and North Korea, purely for the fact is with the recent sanctions, North Korea did say that the US will pay by due price if the sanctions are harsher. So with the recent 15-member council putting high sanctions on North Korea, would actually give some concern that the move now could be close to a bull trap towards that 110.50.60. Now, definition of a bull trap is a situation where the market traders enter a long position near the top or near the uptrend. And this has been quite a firm rally and it unexpectedly sees a reversal from there. So do play a little bit cautious and keep your stops close. The technical implications are not the best to support this bullish move. So I am questioning whether it will sustain in the next 24 to 48 hours. First of all, we'll look at the dailies and then I shall shift on to the weekly for the pound. So overnight, the stronger than expected UK August inflation figures came to a great surprise to the market after sterling surged through the 132 handle and now looks towards a 133, which is now within its grasp. If we move to the weekly, you get a bit more of a picture where we're looking to go. Now, the August CPI figures come out overnight stronger or more upbeat at 2.9. Previously it was at 2.6 with an expected at 2.8. The core yearly inflation came in at its highest point since 2011 at 2.7 with the previous at 2.4. Now, the biggest question is whether these upbeat figures will be a case for the Bank of England to start talking about rate hikes. Although Bank of England Mark Carney will try and talk these down, the talks will be quite heated, and I reckon from the recent numbers coming out that we could soon see a move in the rates in the UK. Initially, I look for the resistance at 133.20 to 133.70.85, with the objective now looking back to July last year of a 134.40.50. Now, with that bullish call, do be a little bit on the guard that a move through 131.80 could negate this view completely and see the market tumble heavily towards 128. So play your cards very close to you in case we do see this view turn around sharply. The yellow precious metal did tumble yesterday towards its objective of 1,320.22. Printing a low of 22, the market rebounded, but is not enough to support a further recovery in the next 24 hours. In light of the pattern from the technical implications, I expect to see another down test and see how well the level of 1,320 holds out. If it fails, then we could be looking towards 1,314 as people start bailing out of their long positions, which could go to 1,308 with the resistance capping at 36. My view still stands, like with gold, to a bearish outlook for the white metal, with the silver now pressuring the support level coming in at $17.60. Now a break beneath there would give further scope towards a target somewhere around, if we look closely, at $17.20. I'll make it a little bit more clearer for you. Around these peaks and this trough, it's around $17.15 to 25 actually. But with the technical implications coming through negative and also the RSI dropping down quite hard, it does give a little scope to the upside, with the resistance coming in now around $18 figure 20. And to wrap up with oil, the market still maintains its bullish view towards $50 a barrel, which could stretch towards 52 and reassess from there. Keeping a close watch on these technicals. As long as we hold above now at 48.20, then we should see further rises. But if we get a break beneath there, then this would turn the market back towards 47, 40.60 and reassess from there. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day ahead that's ahead of you.